kind of hard with the run-up that we've had already. Rajesh Baheti is now joining in. Yash was telling us about the SEBI, what all SEBI has approved, especially with regards to how stocks perhaps will be made part or excluded from the F&O list. Rajesh Baheti is Managing Director at Crosseas Capital Services. He's with us here, joining us from Singapore this morning. Rajesh, what did you make of it, the changes?
Yeah, so this was floated as a concept paper, and ostensibly SEBI had said that the revision when it took place, indices were at around 8,000, and we are at around 24,000. So 3x, everything has gone up 3x. The volumes in the markets have gone up 3x. So maybe the criteria should be revised up 3x. I think we can take that point fairly that some revision needed to be done. But two things I would like to mention. If you're going to link it to the index levels, then why not just automate this whole process in the sense that tomorrow if the index were to go down by 10, 15%, and this criteria remains, I fear that over 50 to 60 stocks will go out of the F&O segment. So I think if you are trying to revise the guidelines upwards based on the levels of the index, maybe put a formula in place that revises it up and down automatically every month or so that you get a new level for all these criteria that SEBI has fixed.
Rajesh, particularly this changes the new criteria for single stock F&O entry and exit. Does it in any way impact Avenue Supermart? Because that's a stock which everyone's been wondering when will it enter the F&O, because of some criteria it wasn't. So will it impact Avenue Supermart or perhaps even a stock like Zomato?
Absolutely. Some of these stocks should have been included in the F&O segment. The regulation states that there is some math, and then the list is sent by the exchanges to SEBI, and SEBI has to sign off. So one problem I have with that is that once you've made this criteria and all the new criteria, and it's a pretty strict criteria, A, it should be revised up and down with the index levels, and B, there should not be much signing off after that unless there is some regulatory action on the company. So pretty much the introductions now or the exclusion should be automated. So if that were to take place, I think Avenue Supermarts and Zomatos and Paytm should have been in the F&O a long, long time ago. But somebody obviously didn't sign off on those entries. But now with this new criteria, if they're eligible to come in, I think it should be pretty automatic. And that's my request to SEBI, not to have somebody sitting on a table signing off on these.
Okay. Rajesh, just one more thing. There's been so much talk recently about what's happening in the F&O market and how, the finance minister has spoken about, the RBI governor said something recently. And of course, that question came up in the press conference, if you watched it, and was put to the SEBI chairperson. She said, we'll obviously do everything in a consultative way. They've appointed this committee now to look at, headed by RBI ED. It's got various members. We understand there'll be some market participants who are part of the committee as well. They will study this and then sort of come up with recommendations. She said, outside of it, there is no other. We won't do anything else. This is it. The committee which they've appointed. So, just wanted your thoughts there, Rajesh.
So it's like when we do reporting, I think the first lesson we should learn is to report correctly. For example, if you have $100 and I have 1,000 rupees, it can be reported that I have 10 times more currency than you have. But in terms of money, I don't have more money than you. So the first thing our exchanges do is report nominal turnover and not premium turnover. I think that is a little misleading, because if you buy a 5 rupee option on a Bank Nifty contract, I'm trading 5 rupees, but gets reported as 52,000 odd 5 rupees. So I think that needs to change. Secondly, I think we should also look at the open interest levels that we have in our markets versus other markets. For example, last week, the US triple witching had a $5.5 trillion settlement. I don't think we settle more than a few $50 to $100 billion at a time. So our open interest at the end of the day is not so much. Thirdly, I think our margining systems are the very strictest and the very best in the world. We work on 6 sigma margining, and we don't work on 3.5 sigma like the US market does. So all said and done, I don't think a lot needs to be done. But if you have a problem with the lowest rung of retail getting into the market and trading, what you can do is set some kind of a liquid net worth criteria. For example, if you have 25 lakhs or XYZ lakhs of financial holdings in your portfolio by way of FDs or stocks or mutual funds, only then can you play the F&O segment. Two, we can also maybe double the lot size from 5 lakhs to 10 lakhs so as to exclude the lowest rung of the people from trading. I think those would go a longer way into preventing the lowest rung of people from entering the markets, rather than just trying to, fiddle around with taxes or change expiries, as is being reported.
Okay, well, thanks a lot for giving us your take. I have a